Well, hi there. Welcome back to my YouTube channel, Kite Swift Moves Trading Academy. I have this like the third time trying to make this video until I'm tired today. Anyways, um, so in the last video, I was showing you this indicator, this CCI indicator, and we're looking at that's why it's different. We're looking at COP. This one time we're looking at AMD. Whatever, it doesn't matter. For what I'm trying to show you today or on this video. Before I was just showing you how to use this indicator, and we talked about the price move. And I don't think I got into it, so I wanted to show you the difference between with these price moves, the difference between the stock and an option. And but again, I want to stress I would start off with stocks so you get comfortable trading that, and then move into options and do it carefully. But anyways, so what I did here is kind of like before, the same kind of visual on the screen. Remember, we measured the price change from where the blue line crossed above to where it's going to cross below. And I told you could short it by when it crosses below to where it goes across above again. So this shows you would have had a $16.04 price increase per share of stock, and this one would have been a 17.75 price change per stock. So what does that mean to you in money? All right, I know this is kind of busy. Just bear with me. I took a spreadsheet I had and I modified it a little bit. But what this is showing you, let's look at the stocks first. Is that this was the stock movement right here, the 1604 and the 1775, right? And together it gives you $33.79. And if you multiply that by 100, you would make $3,379. Not a bad day, right? But the thing you have to keep in mind is the exposure. So to make that $3,379, the first stock you would have had $21,387 in the market to buy that 100 shares. And the second one you would have had $22,308 exposure in the market for those shares. So altogether you would have had an exposure of $43,695 to make $33.79 or $3,379. Now with the options, there's a thing called the delta, and if you look it up, it averages about zero point 0.5. And what does that mean? You take the stock price movement, there's our movement again, and you multiply these two, and this gives you the gain per share in the contract for the price movement. But keep in mind, there's 100 shares in each contract, so you'd multiply that number, the gain per share, each one by 100. And this gives you the gain per contract. So you would make $1,689.50. And if you're looking and go, well, wait a minute, the stock's a better way to go. Well, maybe yeah, maybe no, depending on how you're looking at it. Your exposure, I can't go back and look at the history, but just based on my experience with this, the contract cost, the strike price, probably would have been around $5, maybe a little less, maybe a little more, somewhere around there. And you have to multiply that by 100 so you understand how much you're paying for the contract. So, guesstimation, you're looking at $504 and $540. So, your total exposure in the market for those two options would have been $1,044, and you would have made $1,689. So you have a large gain for a very small exposure. I typically trade 10 contracts at a time, which means I would have multiplied this. I would have been $10,440 exposed in the market but I could have easily seen a potential gain of $16,895. And that's the power of the options. You have leverage, and that leverage comes really with a small amount of exposure. Now, some of you are saying, wait a minute, $10,000 is a lot of money. It is, don't get me wrong. But I'd rather be exposed in the market of $10,440 than $43,695 like we did over here. So that's the difference between the contracts and the options. Keep in mind, if you can make big money fast, you can lose big money fast. I don't say it to scare you. I just say it to constantly beat this into your head that you have to be careful, especially when it comes to options. Okay. So anyhow, so that shows you that that's the big difference between these options and stocks. Later on, I'm going to go over like, well, where do these contracts come from, so you can fully like understand what's happening in the marketplace and how this works. So anyhow, hope this has been helpful. Bye.